Recording is on.
Hello and welcome to the Monday 8th of February 2021 DXbiz call. For today, we're going to start with some new member introductions if we have any. A quick OKR overview by the work Venki has done. We'll have an Arbitrum discussion. We'll have an Ichi Farm presentation by Masa. And Sky will be presenting the DX Ventures idea. Is there anyone new here? Is that Masa who's going to speak later? I don't think so. Is Mikhail new? No. No, all right. Venki, are you around? Do you want to start us off?
Yeah, I can start. Just a minute, let me share my screen. So I can see my screen now, yeah? Cool.
Yeah.
So, okay, last week, I think Chris messaged me about how Near Protocol was using Near Protocol was using OKRs in Airtable. And from there, I took inspiration, and then I tried to move all the OKRs that we had in the spreadsheet to Airtable. And I am new to Airtable, and then I'm trying to figure out what's the best way to do this. So for Omen, we in the spreadsheet had our objectives and key results. So from there, what I did was I just took one objective and I added the list of key results that we had, and whatever initiatives that we have listed down in the OKR spreadsheet, I just added them here. If it is part of a roadmap that we have, so something like Omen on XDI, then I just added that as a project. But then I was wondering if to have a better differentiation between a project and initiative. So this is what I came up with. So I'm expecting some feedback or thoughts around it. If it is part of our roadmap, then I thought that we would list that as a project. But then if we are doing something special to achieve our key results, then I thought that we would list that as an initiative. We don't have good initiatives right now that I can help with definition. But then to compare project and initiative is if I'm making dinner tonight, and then if it, I hope that the key result is it's gonna come out good. But then, whatever that I'm doing as part of making my dinner, that is the project. But then, if it turns out bad, and then if I have to do something, some other change to achieve a tasty dinner, then that becomes like an initiative. Does this make sense? And if that's the case, then I probably just go ahead adding OKRs. I'm in the process of adding OKRs for all the other products, and I think I will be done with it by the end of this week.
Yeah, thanks. Thank you. This is great. I have to say that I actually want to set up a couple of hours and do some yearly OKRs for DXDAO, or just start with something. I hope I can do that this week.
Thanks, everyone. Cool. I'm done.
And anyone else wanted to comment? I feel like I cut someone.
The only comment is, seeing these things and just it really does clear your mind in a lot of different ways. And I just feel we're I feel like we are a little more focused now and kind of a clear idea of what we need to be doing, and just kind of seeing Omen there and how that's going to take the focus for like the next month or two, and then Mesa and Swapper being built. I just think we're gaining a little bit more focus.
Yeah, I agree. Like also mainnets, Omen on mainnet is in general difficult with the current state of affairs. Like Omen couldn't thrive on mainnet because we had like a natural huge barrier which we couldn't fix, and that's like 15 bucks per transaction. Like it's already killing it. And with XDAI, we actually have, like, we can finally think about 8K unique addresses, right? We don't have that barrier anymore. We can actually focus on our users, and that's great to have like a very compact dream list of where Omen needs to go, and we need like, yeah, I think it's great, and I also need to get used to do product management with those goals always in mind.
Awesome. Yeah, should we continue? Any other comments?
Can I just ask one question? Because in the first presentation regarding OKRs, I think someone mentioned that we should have like DXDAO wide OKRs, and that other OKRs per project should arise out of those, like higher order OKRs. I'm just wondering, did we define those DXDAO OKRs or not?
Yeah, so this is, I guess this is what I commented. I think there is kind of like a draft for them, but it's not complete. And I don't know, I want to put some time into working on these, and yeah, hopefully get some feedback from the people here.
I think those OKRs will be the most important ones. So those will be the anchors, I think, where we like, if we are unsure, we know the main goals, at least for DXDAO, and we anchor ourselves to those instead of just opinions or something. Like if gas price is super high right now, but we have a main goal, we focus on the main goal. I think that's a super important thing.
Yeah. All right, I think that's it. Any last comments?
I'll reach out to Nangon, and yeah, he's in just preparing this draft for DXDAO OKRs.
Awesome.
Yeah. Cool.
Yeah. Arbitrum discussion. John, do you want to take us away?
Sure, yeah, I hadn't prepared anything specifically, but we now, I mean, I think this is a good time to start talking about Arbitrum and what our strategy could be for kind of L2s in general. As people know, we have Omen now coming onto XDAI. I mean, the proposals are up. You can actually visit the site. So it's deployed. It's just not officially launched on the URL yet. We have Swapper on Arbitrum's testnet. So we've kind of dipped our toe in the waters on these different scalability solutions, if you will. Like XDAI is actually a separate chain, so I wouldn't consider it an L2, but it has, you know, a lot of support for Ethereum related stuff. Like you can use MetaMask, and there's bridges to Ethereum, etc. It's EVM compatible, so it's easy to deploy onto XDAI. So it's sort of like a good place to at least experiment and test out things in kind of preparation for what might come further down the line. I think with all these, with the gas price the way it is, right? You know, like right now we're looking at 200, 300 Gwei, with Ether breaking into new all-time highs. Like even just simple transfers are getting into double-digit dollar costs, right? So like things that you would normally do in DeFi are becoming very expensive. DAO governance is becoming like completely prohibitive. Like it's become very difficult to use. You know, I mean, it's extremely expensive to use Alchemy these days. Like the only reason it works at all is because DXDAO is actually subsidizing, you know, basically the critical stuff, and we're getting by. So I think it's all just impetus to start thinking more seriously about what the scaling solutions are and how to position DXDAO to take advantage of them on the business side. So, like, basically, I think a lot of us have looked at different things. It's great that we have Christopher from 1KX on the call here, because I know they know more about Matic Labs. You might want to touch on that a little bit too. But I think, you know, there's different categories here, and it looks, at least as I understand it, like optimistic rollups are going to be the first kind of platforms that are fully EVM compatible, that offer some kind of a layer 2 on Ethereum. And it looks to me like Arbitrum is probably going to be the first one to mainnet that is like open to any product to actually deploy on it. They're going to have like admin keys at first, and like, you know, even like the concept of optimistic rollups are still like somewhat experimental. So there's no like guarantees here, but I think once Arbitrum is on mainnet and anybody can deploy, like we saw there was a SushiSwap post in their forum where somebody was suggesting that they deploy to Arbitrum. And I think you kind of see that not a lot of projects, not a lot of people really know about Arbitrum yet, but once it's live on mainnet and projects can actually do this and it's composable, I think there's going to be this like acceleration and like competition around that L2. And I think it makes sense for us to try to position ourselves there. So what I would say, or maybe we can talk about this here more, is like, I think we should start coming up with a more focused plan on launching all of our products on Arbitrum, and how we might actually even start to push liquidity there.
Yeah, I agree. I think people already realize that this is like a gold rush time where we need to be aggressive and bold. Like, we need to do it. We need to go to Arbitrum, and we need to like install the base now as soon as possible. Like, this should be the highest priority, primarily because Swapper is not even live, like officially live on mainnet. So Swapper has a chance to be live on Arbitrum as like the official Arbitrum swap. Like, I think it should be to be the Uniswap on Arbitrum, and this is possible. But I think before we think about the products, the most important part to do is install the DXDAO base on Arbitrum.
I guess it's good that we have Oren on the call. I think like this might be a more call for like the dev call, but like a topic for the dev call. But yeah, deploying Alchemy on Arbitrum, I'm assuming they'll have some support for the graph there from the get-go.
Yeah, apparently on the test nodes right now, they don't have support for full archive nodes on Subgraph, but they should have that ready for mainnet. Yeah, Christopher, like the last we heard, they were aiming for March. We haven't checked in with them the last week or two, so I don't know if anything has changed. I think the main thing they have left is just like checking off with their security audits to make sure things look good for mainnet.
Yeah, I spoke a little bit with Arbitrum. Actually, I'm in touch with them for a long time, and yes, they are not ready yet with the archive node. But what we can do, if we really want, Alchemy or maybe other DAO to be hosted on Arbitrum, or what you can do, you can hack a little bit the contract and make it like totally event driven. So then we actually don't need the archive node. So this is an option, and if you want to do that without waiting them to be ready with that, because it's a long time that you are waiting for the archive node now, so we can do that. So we should put some effort on that and just do that. I still need to evaluate and estimate the work, but it's not something which cannot be done. So we need to consider it.
And it's just adding events to the functions, right? Like, I don't expect we need like security audits for changing those, like for adding those events, right?
Yeah, generally, what Starbucks is doing is like, yeah.
It wouldn't be, yeah.
In a sense, it's like adding events which can provide us enough information to get the state of the contracts. And there are some points which will be maybe a bit difficult to do, but I think if we can overcome that. And this is something I already discussed with Arbitrum, and I already done kind of a small research on ARP, and yeah. And if you're asking about the audit, it's always good to have an audit after we are refactoring the contract. In general, it's good to do ongoing audits to our contracts. Even if it didn't change for a period, so let's re-audit that. It's not something that I think DXDAO should consider. Anyhow.
Also, like, the question is, do we really need the DXDAO base before we start thinking about pushing products to Arbitrum, or could we do like I said, my personal view is we need to go full force into this, and we need to do it now. The question is, like, could we do everything together? Which means, why are we pushing those products out first? Like, like the DXDAO base on mainnet can actually push them out on Arbitrum without any issues. Why are we getting the base installed? And then, yeah, I think we should do both, like everything in parallel.
Yeah, I think we can push at the same time. And for testnet, like that's kind of maybe the first step for all the products. For testnet, we don't really need, because it's just testnet, right? So we don't really need the proper base. Interesting.
What Geronimo, what you just said though, the mainnet DXDAO should be able to push products out to Arbitrum. Technically, that's not possible, right? Like, we have to have.
It's possible. The only, like, it's possible, those product contracts, I mean, for Omen it will be difficult because Omen already uses like the DXDAO as curation, but we could, like, for the first versions, we could just like hack hardcode stuff into the products, into the front ends to make sure that it is ready on Arbitrum, but without the advantages the DXDAO provides by being connected to the products, right? Like Swapper, it would be awesome if the DXDAO could like immediately provide liquidity on Arbitrum, because this would be a major advantage to everything else out there. So we could be like already the first base of the liquidity pool, like the major liquidity pool. And
can you explain how that will be an advantage? Because, you know, like, as far as I understand, or I expected, you know, I think there will be almost no integrations. There will be like almost no liquidity. And so, you know, just us providing liquidity, I don't think that will mean anything.
Yeah, I mean, by letting the DXDAO push like 500,000 of ETH and DAI as like the main pool, I think other projects could like connect to the main pool by pushing their tokens into Swapper. Like, I expect that projects will put the liquidity into the main pool, right?
I mean, I'm all for, you know, switching early to layer 2, and, you know, so that our developers really know how, you know, that migration works. But I'm very doubtful about, you know, like that layer 2 will be used that early and that heavily, especially, you know, liquidity dependent stuff.
Yeah, maybe we will have a worse situation than what it is right now, and we have it like 200 way will be cheap gas, right? And price still goes up, and if Ethereum gets more popular and layer 2s will be kind of like it's either layer 2 or you go to centralized exchange, right? So
I mean, when we talked with other projects, a lot of them, they favor kind of like a wait and see approach. But also, like the average size for their, trades or, kind of, I don't know, like whatever transaction they do is usually like pretty large, right? So, when you like do like $100,000 transaction, you don't really mind if you're paying like $200 in gas, right? But DeFi has not really been, it's not really like a playground for retail anymore. It's just really like a playground for whales. And so if we go to, layer 2, and then I don't know, maybe we could, combine it with the launch of like one of our tokens. I don't know, like the Omen token is probably like the first one, and then really try to get retail on board because retail is being abandoned right now by everyone. That could be like a nice way to maybe get things started, especially like around Omen.
Yeah, I agree. Also, I think this comes also very handy for us because the Swapper team already is working on this liquidity mining UI, which allows any team to just like create those rewards programs. So it would be amazing if we could do like the Omen token, could push the Omen token into Swapper on Arbitrum. Like even thinking about promoting this rewards liquidity mining feature on Swapper with DXD or something to get some stuff in, let people play around with it. I'm also skeptical that like everyone is moving, like even the DXR will not move a lot, but we need to push money to L2 Swapper just to be like one of the first. And I actually believe like there will be huge advantages by having a product out with some liquidity in, because this will push other liquidity into the pool. Hopefully, it's a bet.
So I have because we chose to not create a token for Swapper now, at least we're choosing the hard fight of getting liquidity. Like almost every single swap service out there created their token, farmed it, or had some kind of reward program. We didn't, or we don't. And doing a swap service at the same time as actually fighting a battle on 2 different layers, layer 1 and layer 2, and maybe even like several layer 2s. I think it's hard, and I started to question like the purpose of actually launching on different chains at the same time. Maybe if the more we see it, maybe we should push into that bet that layers 2 will be actually this year at least be relevant and have a volume, and we will be niched into that. And for us, layer 1 will be that bridge. We will still be able to do swaps, but most of the liquidity maybe is on layer 2, and we put our focus on layer 2. And the focus on layer 1 will always be getting people from layer 1 to layer 2, even with aggregations. If people have liquidity and they will they want to transfer from, let's say, Uniswap or Sushi, we will provide them with those tools to do that easily. I mean, we can't fight all the fights at the same time. I know we have a lot of ideas and stuff like that. So I'm always thinking like, so we need to maybe choose a fight and yeah.
Yeah, I think Christopher is right in like, this isn't just going to happen, right? And it's not like suddenly, we flip on a switch and everything falls into place. Like recreating an ecosystem is really hard. And people talk about this now, and it's like, oh, we want to recreate Silicon Valley in some way. And it's like how you get the mix of all those things, I think, is really difficult to predict. And so I think the wait and see approach is right because you want to see how the market develops. But I do think Swapper specifically is in a different place product-wise because it is still in the bootstrapping phase. It doesn't have tons of liquidity. It can't rely on, those trades would justify the gas cost. So I think it is a different mindset for Swapper now. I think token incentives to bring onto layer 2 is a really good idea. And this is Loopring is been doing this now with their incentivized program. They have like $25 million of volume a day, a couple $100 million of liquidity locked. So I think it's a way of drawing liquidity, and we should definitely consider that. I think the one thing we're missing, and kind of is missing from the whole ecosystem approach, is a lending protocol. People are obviously going to want to trade on an L2, but people also want to have leverage in some way. And so I think that's maybe something we should be considering as partnering with someone or figuring out the lending component of it, because I think that will be important to actually like developing an ecosystem out, so you can actually do more things than just on Looprings now, which you can really just like trade certain pairs very quickly.
So maybe we should do some kind of workshop with one of the L2s, let's say with the Off-Chain Labs, and talk about the ideas we have, and they have their other projects, and they're also fighting these fights. And maybe we like if there's a lending protocol out there, and they want a swap service, or they want to be connected somehow with liquidity, and we will do that. And so I think there's a lot of, like, instead of just fighting alone, like Off-Chain Labs as an example is super interested in making us succeed in this fight, and maybe we could get help. Not everything needs to be internally made here.
Right. But I would argue that if we do the Swapper installment on Arbitrum right, and hopefully with DXDAO base installed and connected and started with liquidity, I believe other projects will come to us. So like if we create value on Arbitrum, they will come. And we can of course like be proactive and try to get see actually what's going on the borrow and lending protocol side on L2, and like be also aggressive. But I think our first huge priority should be to get the stuff done, and it should be working without any issues.
I think with the tools we are creating for Swapper, with the create your own farm, the different, like the uniqueness of actually being able to reward more than one token, stuff like that is already niched and good enough for layer 1. But having that on layer 2 also will, I think, as you're saying, a project will come to us, and if a project wants to do farming today, they will probably wait or needs to go to layer 2, right? Or do it and don't care about the gas price. Like I'm just looking at I'm looking at PrimeDAO. They have a staking thing, and I'm not gonna do it because it's too expensive. So, like, yeah, I don't know.
Every project on Arbitrum for the next months needs to have those incentives in place, right? Everyone needs to give out money to make sure people are moving. So having this on Swap, like it's awesome that we're actually building this feature, because it's like a major tool for us, hopefully.
I think so, and connect that with Misa. If we have ideas on Misa, and they want to have an aftermarket, or they want to have staking, whatever it could be, we will be there with those tools for the aftermarket. And I think we don't need to think sushi swap big, and maybe the market would come to us instead.
Yeah. So there's a lot to kind of like discuss on this topic.
Yeah, we need to further develop this and kind of figure out the plan. But good thoughts here, I think.
It would be interesting to see what is other projects thinking about. Like, what's the future of doing stuff on layer 1, and what's their plan? Like, they can't just rely on the users paying like huge fees every time they do something, right? They need to have a plan. Like if this continues or grows, like they need to have
so
Christopher.
so
I think.
Meta,
Yeah.
Meta Labs just I think they're going to announce it pretty soon. They're just like doing like a pretty big strategic race. I think DXbiz is leading it, but there's a lot of participation from basically almost all DeFi projects directly participating. And like most DeFi projects that we talk to, like almost everyone is kind of like in agreement that ZK, rollups are like the way to go forward. And ZK Sync is like the only one that is doing that in a decentralized way. And I think they're also optimistic that they can actually launch before Optimism. But let's see. I'm not so sure on that.
Sounds like a new set of buzzwords.
Did you say that the DeFi projects are also investing in that round, or they're just ready to use?
Yeah.
How does DXDAO get in on this?
Yeah, I'm sorry. Like this round is already closed. ZK Sync is not EVM compatible, but they so it's Rust based, but they will have like a transpiler that will basically make the code reusable. Yes, Zinc is kind of like the Rust-based zero knowledge language, but yeah, they will have like a transpiler so that Solidity code can be kind of like converted to the language.
Yeah, so their goal here is to make a ZK rollups where you can deploy, like basically be fully EVM compatible. Unlike like Loopring, where you can only do very limited transactions.
Yeah, so I also think Loopring is also one of the projects that invested. And I think also Loopring wants to use it, but I'm not too sure on that.
Yeah, as I understand it, Loopring could be flexible in changing what their underlying tech is. But I guess I meant like what in terms of what they have today live on mainnet, like you can only do like some DEX trades and some limited AMM functions. So, yeah.
Should we continue? I guess maybe we should schedule like a scaling talk, or maybe take over, I don't know, the product strategy, or I don't know, the weekly call specifically to talk about.
We did do this like 3 weeks ago, actually. So that's where part of I do think we're like ahead of a lot of groups in this. And like, actually I remember because Christopher had some good comments on the product strategy chat, like in the thread there. But I think this is like the most, maybe not the most important thing, but this is like what's just going to drive so many different decisions and like product decisions, really. So I think we can't talk about it enough.
100%.
I think the next product, like continuing this in the product strategy call, is a good idea.
Yeah. Should we move on to the next topic? Masa, are you here? Thank you. Right? Yeah.
I'm just getting off of mute. Can you guys hear me?
Yeah, we can hear you.
Hey, how's it going? I did have 2 or 3 slides. I could share those, or I could just talk through it. I'm not sure. What do you guys want to do? Here.
Yeah,
slides are
all right, we'll go ahead and do them. Just 1 second. Let me know if this is coming up. See this?
Yeah, we can see your screen.
Great. I go by Masa. It's actually short for Masanobu Fukuoka in the Ichi community. No, I'm not Japanese. But like many in this space, I value my privacy, I value my family life, and I also didn't want a lot of people buying Ichi based on my reputation. I'd rather they looked at what we built and decided whether to participate based on that. So we launched as an anonymous project in mid-November. I'm ex-Amazon, ex-IBM. I kind of pulled from my 10, 15 years of working with IBM and Amazon to get a couple more developers on the team early on from large companies such as Red Hat and Microsoft. And so we're not the typical, I guess, a group of developers that's been in the space hacking for 5, 6 years. But I did follow Ethereum ever since 2014, 2015. At the time, I was running a business for Amazon in Europe that gave out a lot of loans to companies selling on Amazon, and also tried to incentivize better pricing across their platforms in Europe. So basically a lot of ways of getting money in and out of bank accounts, moving it around to incentivize actions in a large decentralized network of businesses. And so when I saw what Ethereum had built, I readily understood what it was good for, because I had spent months of my life trying to chase down the payments team, trying to deal with regulators, having different attorneys in different countries, supporting our licensing and whether or not we were a licensed payments entity. And so programmable money made a ton of sense. I then went and worked in enterprise blockchain for a while. And all along the way, there are two major blockers to doing anything real with the stuff in this space. One is your scarce asset may or may not be a security, different jurisdictions around the world, which means businesses who have a large business to lose can't really risk their current business on the whims of a regulator. And then second, even if they got past that risk, the volatility of these scarce assets is such that you just can't do real business with it. You can't, if you need to pay your employees in a way that they can then go pay their bills, you need to pay your taxes in the fiat. So having something on your balance sheet that just fluctuates wildly against expenses makes no sense. And I ended up becoming the advisor for several layer 1 projects and met the same problem there. And I guess about September, looking at what was going on in DeFi, I figured out how to solve it with a stablecoin approach that works just as well as USDC or USDT, but it's fully on chain. And I guess one of the other beliefs or tenets behind this project is that every community that's created a scarce asset could benefit from their own in-house stablecoin. So it's not enough to make your scarce asset one of hundreds of other collateral types for somebody else's stablecoin, because people exit your economy every time they sell your scarce asset for that stablecoin, and you're just not getting enough value flow back to your scarce asset to keep it valuable and keep accomplishing the goals of your community. So I do think that every community will have their own stable currency. I think they need it to prevent their scarce currency from being sold on the open market for fiat or USDC or USDT. And I think in your community, the AMMs that you've created, the lending market you were just talking about, your payment service, all of those could benefit from USD exposure. It just can't be USD exposure that comes at the expense of DXD price. So I'll go through briefly how it works. Basically, like USDT or USDC, you always pay exactly $1 for an Ichi stablecoin. I felt when I started this project that people were not really thinking about first principles in the space of stablecoins. There have been over 200 projects in the last 2 years for stablecoins, and most of them make something that's quasi a dollar. You know, it's some sort of algorithm that causes it to float close to a dollar. Maybe you pay a little bit more because it's backed by a lending market. And none of that has managed to compete against USDC and USDT. You know, one of the things that got this project started is those two assets were the biggest by far in SushiSwap's liquidity farming and in Uniswap's liquidity farming, and now across all of DeFi. If you look at the top of DeFi Pulse and you inserted USDT and USDC there and their share amongst it, you basically have two companies controlling DeFi. And it's because you can mint those for exactly $1 and redeem them for exactly $1. So I can't overemphasize that point. Second, it needed to be 100% on chain. You don't know what Tether or Circle or Coinbase, I mean, you don't know what they're doing with your funds. They're the collateral, so you can't call it DeFi even if it's not on chain. And then last, it needed to become over collateralized. So this seems like a contradiction with mint for $1, but minting isn't the only way to drive over collateralization. So you can still mint for $1 and drive over collateralization by keeping fees in the collateral, by investing the collateral, by asset appreciation, by adjusting the minting ratio. So all of the Ichi stablecoins are designed to become massively over collateralized. I guess as a last point there, we made stablecoins for Bitcoin, Ethereum, Chainlink, and we just launched one for Wing.Finance last week. These are all working. They've all stayed at $1. There's about $5 million locked in the protocol now, maybe 6 million today. So just two months in, it's going pretty well. Any questions?
Yeah, when it says mint with USDC and plus DXD, but how does that process work?
Yeah, let me show you real quick. So here I am on the page for, let's do 1 Ethereum. So if I go and I want to mint, let's say 100, 1 ETH, first I'm going to get the warning that I don't have ETH in my wallet. Here we go. So you see this minting ratio at the top? It says 88.8% now, right now. That means that you pay $88.83 USDC, and the roughly $11 to $12 remaining in ETH. Now, when I go to redeem 1 ETH, I only get back USDC less a redemption fee that again stays in collateral. It's more of a safety fee. It's not anything that anybody uses to profit. So what's happening here is that I'm paying exactly $1 of value, but it goes in as these two parts and it comes out as one part. And then in the background, you can see this treasury. This will load in a second. Over time, you can see that there are 328,000 circulating 1 ETH stablecoins. So that's roughly $329,000 of liabilities. There's collateral of $291,000, right? So if all of these people decided to redeem at the exact same moment, there would be 30,000 stable coins left there that didn't get a dollar. They can't get anything. All they have left is a coin that can't be redeemed, but does represent a vote. So there are 30,000 votes left, and those votes control this $160,000 treasury. So their votes just became really valuable, but their stable coin can't be redeemed for anything. So what they should do is put forward a proposal to sell $30,000 of the treasury for more USDC, so that they could then redeem their coins, and then they could decide what to do with the remaining $130,000 after that.
With that one ETH right there example, that is over collateralized because the ETH price has gone up. What if these?
There are actually four
ETH
things driving. Yeah, there are actually four things driving, at least four driving the over collateralization. That's one of them. So if ETH price goes up, it gets over collateralized faster. But you saw that fee on that last page? That fee stays in collateral. So even at a flat price and no other returns, it would become over collateralized, albeit a lot more slowly. And then finally, both of these asset types, the collateral and the treasury, can be invested in DeFi protocols, so that even with a price that's declining, it becomes over collateralized. But granted, most people in this space don't generally have a problem with thinking that ETH price will go up longer term. The minting ratio is what controls the risk. So when you minted the very first 1 ETH, you paid 100% USDC. So you have no doubt that I can give you your dollar back the very next moment. And so what the minting ratio and the governance of that determines is how quickly that minting ratio should decline. So under favorable circumstances like we've had, the minting ratio is able to go from 100% to 88% in just a month, right? But if ETH price was declining, you had investment losses, people weren't willing to pay the fees, I don't know, then obviously the minting ratio would stay closer to 100% for a much longer period of time. The other thing you can do, and it's the last thing, is most projects, yours included, if the circulating supply is believable, have a bunch of scarce asset treasury. And they can deposit to this community treasury without minting. And if they do so, the stablecoin can lower its minting ratio even faster, causing more people to purchase that scarce asset on the open market. So that's probably the last thing. That all the idle, uncirculating coins might as well sit there backing that community stable currency.
Yeah, so I think maybe in the context of DXDAO, this could be used essentially allow DXD holders to create a stable coin that's backed by DXD, and allow them to, since this one DXD stablecoin is one, it's used by, I don't know, providing liquidity on Swapper, like why should it be USDC pairs and not one DXD pairs? And then the other thing is that they get governance rights over this created treasury.
Correct. This is like banking for a DAO, right? Like all the control sits with the stablecoin holders or the DAO. Like the stablecoin holders could vote in another form of governance, whatever they feel like. You know, so you didn't lose control of your treasury. You just created a stable currency feature for it. We just made one wing. This is for wing.finance, which is a decentralized lending platform built by the ontology team. We launched this Friday with a low level of liquidity incentives, and they've already minted 80,000 of them, and it's already at a reserve ratio of 100.5%, even though the wing price has been flat or declining in that time frame, the last 2 days really. But their thought was the same. Every time people deposited to their lending platform or re-upped, they sold the wing incentives that they paid to them, right? And if you look at Compound, who kicked this whole craze off in June, until this last run up, like over the last week, Compound's price had been flat since June, while the amount of circulating USDC went up 20 times. And then now Coinbase is going public, right? Like the whole DeFi space is getting raided by corporations at the moment.
Yeah. I guess any questions? Masa, the next step will probably be to post on the
I have one question, sorry.
Oh, yeah. Go ahead.
Sure.
I didn't understand it completely. I have to read more. But if you take the USDC, you are centralized. You're centralized too, or why not? This point I didn't understand.
Yeah,
because
you're 100% dependent on USDC.
Okay.
If you don't deposit anything to the treasury and just mint your first stablecoin, right?
Okay.
So no question about it. But the goal is to transition away as quickly as possible. And I mentioned 4 different levers that can be used to do so.
Okay. Yeah.
And that transition's already occurring for these coins that are in the circulation.
So the goal would be 200% collateralization, because then are like free from
10,000%.
10,000.
Like I'm not really saying that as an exaggeration. There are projects with treasuries that could put billions of dollars in treasury behind their stable coin, and why don't they?
Okay. Now I get it. Cool.
Yeah.
Okay. Yeah, we need this.
Yeah.
No, I'm not. I'm only part of a community.
Yeah.
So, yeah.
Awesome. Yeah. So what we did with Wing and what we've done in other communities is just make counter proposals. Ichi doesn't build a stable coin without voting on it. I don't think you guys would adopt one without voting on it. So if you guys are interested, that would be the next step.
But in a way, we risk our treasury on this. We collateralize our treasury.
Your treasury, it gets sold every day. You just identify the mechanism. Who did you pay? What did they do with it? Right? You need to transition your economic activity to your own stable currency to protect your treasury, to grow its value.
Yeah, but you go long at the end.
Yeah.
You go long with your treasury.
Correct.
Okay. Yeah. Thanks.
Yeah. Any other comments? Masa, I guess like if anyone wants to make a comment, go for it. But the next step will probably be to post in the forums, in the DAO Talk forums, kind of like maybe even links to the documentation so people could understand maybe a bit better. And have a discussion there and see how it progresses.
Yeah, and you can always find it at ichi.org or ichi.farm. We just got the .org domain. There are docs there. I did my best to explain it, but nothing's as good as conversation. So be sure to ask any questions you have. Hey, and congrats on your success so far. This was a fun community call for me to attend as I aspire to build out the Ichi community in a similar way.
Yeah, thanks for the presentation.
No worries.
Yeah, should we move on to the last item in the agenda? Sky, are you here?
Yeah.
DX Ventures.
Cool. So last up is the introduction of more formalization of an idea that the DXDAO community has been discussing for probably a number of months now. I think Christopher, you're probably like this too because you've mentioned it in the past. But softly, DXDAO has been in conversations with a bunch of projects about potential incubation, potential investment, potential grants to get projects off the ground, things that are relevant, mainly projects that are relevant to DXDAO. DXDAO in general has a lot of obstacles in the space because it's trying to operate and grow as a decentralized collective, and a lot of the core pieces that it really needs of infrastructure and tools don't necessarily exist. And so along that path, there are conversations with projects like Almany, like a decentralized blogging that like a DAO could own itself, decentralized GitHub. Like a lot of these things would be decentralized versions of tools that currently don't exist in the world. So things that DXDAO needs. And so the idea of DX Ventures, which the name is up for change as well, but is a way to formally establish and maybe we'll do a proposal that would outline the criteria of what DX Ventures would be doing. And the initial idea, there's not a live post. There's only a really rough working doc currently on some of this, but I guess we'll post it soon on the forum and it will open up discussion. But it's a formalization to create, let's say, set $1 million aside to do investments up to, let's say, $100,000 to get projects, to seed and fund projects that are creating these tools and solutions that DXDAO itself needs. But bigger than that, like we think DAOs in general are really going to grow and become more and more important and more used. So theoretically, these tools that are being built, the things that DXDAO needs, are the same tools that more and more people throughout the world will need, especially in the crypto space, right? And so rather than kind of do this on a informal basis where we don't have a set known structure, that's having the set structure is useful internally to everyone be on the same page, but then it's also really useful to have an external voice so that projects who are solving these needs know about this program and can come to DXDAO with interesting ideas and things. And Christopher and 1KX and then Delphi and other funds and entities that hear about projects and things like this as well, they could also feed into this kind of deal flow. And then that's kind of like the idea of the program. But then some of the benefits to DXDAO in general would be like, this is a program to do investments and actually profit and help DXDAO and DXD holders in the long run with these investments. It also creates a whole deal flow of projects that could lead into Mesa and token offerings, and then eventually swapper and secondary liquidity, and then potentially other products that DXDAO has. So it's a really cool kind of path throughout to bring projects that will eventually be important in the world through the DXD ecosystem, like hopefully from the early days, to help develop and build that relationship, and then lead through the different products that DXDAO has been building. What else? Yeah, so I guess it's really like figuring out what these projects, I mean, some of these projects can be, we were trying to come up with like examples of what these projects would be. And a lot of it comes down to things like decentralized medium, decentralized payroll, decentralized key management, decentralized node operation, decentralized repository, decentralized code collaborations, right? These are the types of ideas that a lot of them don't exist in the world. There are a handful of projects working on these things, and these are things that DXDAO needs, and DXDAO has a reason to invest in these, get in early, get them off the ground, build that relationship, and then actually hopefully own a piece as an investment for the long run. And so how this actually can happen logistically, it's easier when a project has a token and there can be an exchange of cash or money, you know, from the treasury for tokens. But then there's also even projects that don't have tokens. We can have less formal agreements and things. Obviously, there's no legal entity, but there are ways to work together with projects in stages and give funding in stages, and have agreements like informal on-chain agreements to be able to then participate in like a